Welcome back, traders and investors, to our weekly market technical trade review on June 4th. The stock market, particularly the technology sector, has shown impressive upward movement in the past few weeks. However, the question arises, are these moves sustainable? And where is the market heading next? To gain insights into the future direction, let's examine the major US stock indices, specifically the Nasdaq 100 and US 500, and analyze the market trend across multiple time frames. Starting with the Nasdaq 100, we focus on the weekly chart. At the end of last week's trading, the index maintained trading activities above the critical supply zone of 13794-14166, which was breached in the previous week. This breach was crucial in sustaining the current upward trend. Notably, previous trading activities in March 2022 around this level revealed a failed breakout from the initial drop at 16,533. This resulting in a decline to the demand zone at 11,055 and 11,428 in June 2022. Moving on to the daily chart, we can explore the price action in more detail. The current supply zone at 14,140 and 14,456 holds considerable significance and could heavily influence the index's next move in the upcoming trading sessions. Examining the trading activities around this zone in the last 5 sessions, we observe how prices remained within the area and closed above it on Friday. By comparing the trade conditions in March and April 2022, we can speculate that the index might follow a similar path if it breaches the critical supply zone at 14,140 and 14,456. If this occurs, there is a possibility of a retest of the supply zone at 15,302 and 15,618, based on the previous trend in this area. On the other hand, if the index fails to breach the supply zone, a pullback to the demand zone at 12,978 and 13,294 could be expected. It is crucial for traders and investors to monitor these zones closely and take appropriate action as necessary. Turning our attention to the US 500 index weekly chart, we find a similar uptrend to the Nasdaq 100 index, with increased gains over the past 3 weeks. It has broken into the current supply zone at 4,150 and 4,320 and sustained the upward trend, pushing towards the top of the supply zone by the end of last week's trades. The current supply zone at 4,150 and 4,320 acts as a valuable point of reference to guide us on the index's future direction. Previous trade transactions around this zone in May and August 2022 and February 2023 highlight its significance. If the momentum continues in the current trend, the index will likely face a test at 4320. Let's examine the daily chart to better view the price action. The daily time frame provides a clearer picture of the current price structure, where the supply zone at 4,291 and 4,332 falls within the weekly supply zone. This reinforces the importance of these zones and enables us to determine the index's potential next move. While the weekly price range allows for consolidation, the daily chart presents a distinct view of the possible breakout area to the upside, specifically the 4291-4332 supply zone. Previous attempts to breach this critical zone were unsuccessful in June and August 2022. The question now arises, will history repeat itself, or is the index on the verge of breaking the trend this time? A breakthrough in the current supply zones in the upcoming trading events could indicate a continuation of the trend. Conversely, a pullback may lead to a retest of the bottom of the supply zone at 4,182 and 4,140. Traders and investors should pay close attention to these areas as they could provide vital clues regarding the index's next major move. In conclusion, the concept of supply and demand plays a crucial role in trading. Analyzing price action based on the supply and demand system allows traders and investors to make informed decisions and stay ahead of the curve. By examining multiple time frames, such as the weekly and daily charts, we can gain valuable insights into the market's future direction. This approach enables us to identify significant supply and demand zones and anticipate potential trend continuations or reversals. Applying multiple time frames provides a comprehensive view of market dynamics, aiding traders and investors in the decision-making process. Subscribe to our channel to stay informed about major price movements in the market before they happen. Thank you for watching, and stay tuned for our next critical market analysis.